Hello, and welcome to our financial education series. Today, we're going to demystify a topic that often causes confusion: how tax brackets work in the United States. Understanding tax brackets is crucial for financial planning, whether you're considering a new job, a raise, or just trying to make sense of your tax return. What are tax brackets? Tax brackets are ranges of income that are taxed at different rates within a progressive tax system. In the US, the federal income tax system is designed to be progressive, meaning that as you earn more money, you pay a higher rate of tax on your income. How do they work? Let's break down how these brackets actually apply to your income. Imagine you have a taxable income of $50,000. This income doesn't all get taxed at the same rate. Instead, it's divided across different brackets, each with its own tax rate. For example, the first portion of your income up to a certain threshold is taxed at the lowest rate, let's say 10%. The next portion of income over that threshold, but below the next one, is taxed at a slightly higher rate, perhaps 12%. This continues, with each portion of your income that falls into a higher bracket being taxed at a higher rate. Progressive taxation in action. To illustrate, if we have 7 tax brackets, your first $9,700 is taxed at 10%. The amount over $9,700, but under $39,475, is taxed at 12%, and so on. Only the income that falls within each bracket is taxed at that bracket's rate. So if you're in the 22% tax bracket, it doesn't mean all your income is taxed at 22%, just the portion that exceeds the lower brackets. Common misconceptions. A common mistake is to assume that if you're in a higher tax bracket, all your income is taxed at that higher rate. This is not the case. Each portion of your income is taxed according to the bracket it falls into, which means only the income above the threshold of the previous bracket is taxed at the higher rate. Adjustments for inflation. It's important to note that tax brackets are often adjusted for inflation. This means that the income thresholds for each bracket can change from year to year to reflect changes in the cost of living. Conclusion. Understanding tax brackets can help you make more informed decisions about your finances. It can affect how you view salary increases, additional jobs, or overtime. Remember, moving into a higher tax bracket doesn't mean all your income is taxed at that higher rate, just the income over the threshold of your current bracket. Thank you for watching. We hope this video has helped clarify how tax brackets work in the United States. Stay tuned for more financial insights in our series.